All right, today in this presentation, we're going to talk about this chart here that you see on your screen. This is the Spider S&P 500 ETF daily time frame going all the way to 2021 all-time high level here, 480. We topped out pretty much like, December, January, very early, starting of new year of 2022. At precisely 479.07. Ever since then, this market got into a downtrend, as you can see. Respecting the fact that we have this downtrend resistance, every single time we hit this level, this market did make new lows. Here, 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 here. That is what is known as lower highs and lower lows, right? Something changed though, starting 2023, and we bottomed in October. What we start to see is buyers starting to cultivate higher lows for the first time, right? You can see we have these higher lows and higher highs. And these are definitive higher lows and higher highs. First time we're seeing this uptrend here in the midterm or so, right? And obviously longer term sense, this is more of a bigger swings, yes, and these are a little bit of smaller swings. You can look at it as a fractals of the market trend. And now this is a very, very important level here, because this is the prevalent level where everybody can see. 430, 429 is the level that everyone is watching. So what are we going to anticipate in this vicinity? How is this market going to react here? Well, everybody's looking to see how the market is going to behave in this vicinity. Already you can see that we've been stalling here in the last several days. You can see this is a daily candle, so 1, 2, 3. We see that big move up here, right? And then it's been stalling just right on that 430 level, and that's the swing high from September. That swing high from September is extremely important. We witnessed two island down gaps here. There was an island down gap here, and there was an island down gap here. Two island down gaps, and this market actually stayed underneath 420. That's the first island down gap here. We stayed 420 for the last 9 months, ever since that island down gap was open. And finally, the buyers were able to break or fill both of those island down gaps, and that made a way for the market to finally get to the September swing high. And I also believe it is this downturn right here. This downturn is what made truly impute fear in this market. A lot of people saw that move as a definitive sign of possibly this market getting into something like 2008 scenario. And I remember, individual investment survey, the bearish sentiment was at its highest during that September, October fall. And keep in mind, that fall was the most brutal fall, as you can see here. It lasted almost 2 months straight. This day right here, literally at the low here, this market gapped down. You see how this green candle starts here? It's because this was a down gap. So after this this degree of fall, and then it makes new lows by breaking below the previous swing low, and then it gaps down dramatically. Can you imagine the sentiment, psychological, sentiment of the market participants at the time? But it looks like, and we know today that was an exhaustion gap. That was that final push from the sellers, yes?
Perfect.
And that became the low. And our market is always going to try to trap as many as possible in these, the extreme levels, right? Extreme all-time high and the extreme low, right? And that was 350. And then market finally got to 430 here. So it's important we understand how we got here so we can possibly forecast where we might possibly, we might possibly go from here. So it took a long time to get here. It took literally like month and a half to 2 months to see this market getting, getting completely dismantled from 430 to 350. But to recover from it, it took 9 months. Isn't that interesting how that works, right? I think even in real life, it takes that much easier to gain weight, right? But to lose that weight, to recover from that gained weight, it's going to take you months and months and months. It's funny how that works. It's a lot easier to spend money, right? For most people, versus trying to recover from the money that you spent. Anyhow, so as you can see, we're at 430. First of all, we have to understand what's the definition of downtrend: lower highs and lower lows. Lower highs, lower lows. Definitely we have a downtrend here. Can we say we're still in a downtrend, or has that been neutralized? Well, that's what is known as the equal highs, right? Equal high here, because they're equal. It is no longer cultivating lower high. It got up to that level, and you know what I mean? We cannot say we're still in a downtrend, right? We're neutralized the downtrend. We can say that this could potentially be some sort of base. Keep in mind though, obviously in the market, anything goes, but you can't rely on the outcome that has a very, very low probability, right? This is why it's not a wise investment, decisions. If you're going for some YOLO investment, on something that you think you can potentially get, 1,000 times the your original investment return on investment in a short period of time. Those people usually lose it all. That is no different than going to a casino, right? And most people treat this market like that. So you have to be, you don't want to be like everybody else, right? Because most people always lose. The market always fools the majority. Keep in mind, majority of people are always struggling. Majority of people are always losing in the market. They cannot profit in the market. They might have good days and weeks, maybe even months, but the longer they stay, sooner or later, the house is going to take all their money, and the market continues to recycle, right? This is the main reasons why there are people out there acting when Spider was at 200 that the market was up too much. It's at 430 now. People said the market was too much at 300, 400. You know what I'm saying? Every year there's somebody somewhere always saying things. So we must learn to go against the crowd. And as we understand, market always follows the majority. And we actually want to take advantage of the fear and what majority of people are leaning on. And you want to go the opposite direction to hopefully profit from it. That has potentially higher percentage of playing out. And most people don't understand. Most people don't realize it, right? Because most people always operate in fear. So I think, with some of the levels, as you can see with this, the market showing us some supports and rising pivots and stuff like that here on the daily chart. That's why I drawn this kind of a triangle here, right? So if there's any kind of fall, some of these levels could act as support. We got the potential rising uptrend support here as well. Even the fact that we have some of these levels, I think if some of those levels hold, I actually think there's a good chance this time around we might break above. And I don't know exactly how it's going to play out. It might break above from here and then retest, or it might come down here and then go. It might come down lower and then go. No, that nobody knows. In the short term, how this market is going to break out, I think nobody knows. But once this market breaks out above 430, let's say it does something like this, now we can say for the first time since this entire correction in 2022, we have first legitimate higher high. Bulls now have their own primary term higher high.
Perfect.
That means we have an uptrend if this market gets up. And it has to be really definitive higher high. You can't be calling higher high because, you know, let's say tomorrow or whatever, next couple of days, this thing goes, it makes a little move like that. That's nothing. You got a fair amount of you know what I'm saying, cultivation needs to occur. I think 440 is a good start. Higher it goes, it better, right? But again, it might do this, it might do that, it might do, nobody knows. But I think it's gonna play out one or two or one out of three scenarios that I've given you. Number one will be the best case scenario for the buyers. I think that's where everyone's probably, all the bulls are looking for. Number two, market likes to fold the majority a lot of times. You know what I'm saying? So it likes to be a bit more extreme. So one or three, it tends to be a more likable scenario, I think. Number two seems to be too easy, right? We get to the 430 perfectly, and then it's gonna come down perfectly to the net last known support, and then it's gonna perfectly bounce. That seems way too easy. Let's say if it does happen, I'll be actually, let's say it actually did happen, right? Let's say it actually did that. Like, let's say it came perfectly to 420 or something like that at support, and it just goes right back up. I kid you not. I think what it's gonna do, it's gonna like fake you out on upside. It's gonna come right back to make new lows, and then it's gonna do something like that, where it will fake you out here, and it's gonna get dumped, and then it's gonna break below the support, and then everyone's gonna start panicking here, start shorting or start closing their longs, and then if everything seems to be like in a perfect right order where everybody expected to do, yeah, it's not really triggering any emotions. It's not pressing that right button to piss you off, right? Then market is brewing cooking something to make your life even more miserable. That's what this market does.
I had no idea. I had no idea.
This market does. So I think overall sentiment has improved quite a bit. I mean, if you look at NASDAQ and semis, they're already above the September swing high. So I think S&P is really trying to, you know what I'm saying, follow and catch up to semis and the NASDAQ. I know everything else. I know bears are going to argue, well, Dow is lagging, okay, the small caps and the banks. What are you going to say about these? Well, I don't know if you guys remember how this market recovered in the most difficult environment ever, which was during 2020 after COVID decline. Every bear out there, and not just a bear, I think most people did. They were, concerned that NASDAQ and semis started making a move. S&P was kind of, something like this today, just conservative. And then we saw Dow and the banks and the Russell 2000. They're just lagging heavily. But you guys remember what happened towards the end of the year of 2020? Dow and the small caps and the banks started to follow the big boys like NASDAQ and the semi and the S&P, and they started to make a move to the upside, catching up. I remember how fast they recover. So if I were you, and for myself as well, I will be looking for opportunities. And if you missed out the Nasdaq and semi because you don't want to chase that up now, they're already not too far from the all-time high level, especially as a semiconductor. It's like 5% away from the all-time high. Tues is what, like 12% from all-time high. So you can't chase those. Best wait for the pullback. Instead of chasing, it might be a good idea to look at some of the small caps and the banks and the Dow and trying to capture that possible move that might be coming. Again, we don't know exactly when. None of us can see the future. But I think that would be a kind of good way to start observing how this S&P is going to play out here at 430.
A Thessalonian you're fighting. He's the biggest man I've ever seen. I wouldn't want to fight him.
That's why no one will remember your name.